Well, we have with us Peter McGuire of Agam Australia, who's joining us on the show right here in the studio. Peter, good morning. Thank you so much for joining in.
Good morning. Lovely to be here.
Absolutely. Well, what brings you to India, Peter?
Well, I came down. I always try and make a few visits a year over to India, and it's such a vibrant economy. You know, it's just amazing what we're seeing. And I'm not talking the book up. Yeah. I'm talking fact. And I see incremental change here. If you live and breathe in Mumbai, you probably don't see the changes, but come here every 6 or 12 months and it's sweeping as far as infrastructure and of course what's going on with the dynamic nature of your economy.
Right. Well, Peter, so what kind of conversations are you having with potential investors or traders for that matter, especially in the commodity markets here?
Well, I think they're looking at far as demand picture and what's going on with base metals, naturally with the likes of steel that needs to go into all of these projects, tunnels and roads and bitumen and oil. So the demand picture is very, very strong for internal demand for India. And that's really a conversation in itself. Then you roll across to the likes of gold, and you guys are the strongest buyers globally. So that's very fascinating. And you look at central bank buying, and then the dynamic nature as far as Indian rupee versus US dollar, what's happening as far as interest rate policy and GDP, which is just shooting the moon out.
Right. So let's talk specifics then, Peter. I'm going to start with crude. What are you making of cues coming in from the Middle East? And what are your expectations with respect to crude, at least in the near term?
I've got to look at last week as really a barometer that any market that rises so strongly, like 6% that we saw a shoot to the upside, you can't dismiss that. You don't just say, oh, well, it was 6% last week, and let's just see, there's a reason and a cause. So I think that there's probably further upside for the crude market. To the angst of many consumers, the reality of the matter is you've got geopolitical shocks, you've got probably a war premium being built in a little bit as far as tension, and the cost of inflation. Now, ships aren't sailing through the Red Sea, naturally to Europe through the Suez, less transport. You've got to go around the Cape of Africa. So all of these concerns naturally cause great hardship and cost naturally to the end consumer.
But at the end of the day, how much has this already translated into actual demand and supply gap?
I look at the picture coming out. You saw what the Saudi Aramco did in the last matter of weeks. They trimmed back from 13 to 12 million as far as production. The other side, of course, is OPEC Plus. They want a higher number, not a lower number. And the overall global demand is still very, very strong, rising, and we've got that forecast moving out for many years that it's only going one way, and that's up. So while you have shocks, while you have geopolitical concerns and all of that, the end game or the byproduct of that is naturally price, and that price discovery is what traders trade.
Right. So at the end of the day, I reckon that at least in the near term, we're expecting gold, crude. If it doesn't rise higher, it is likely to remain at these levels.
I would think so. I mean, to go, I'm not saying it's not going to, it's so hard to have no one's a fortune teller that we can look. But the overall picture, the lens that I look through, I would have to say that it's more bullish than bearish. And supply shocks, geopolitical, all of these factors create, again, deal tension for the price.
Peter, you also spoke about, your conversations with a lot of participants here with respect to metals. Where is their interest right now? Also, how is it panning out? Do you have any specific names which in fact are looking at good trends coming through?
Well, if I look at the base metal positioning, I mean, it's very, very cheap. If you look at copper to start with, 8,100 a metric tonne. It's been, as high as we know back to 10 and 11,000. So it's very, very I think underwater as far as price at the moment. And a lot of those other base metals are. So it's cheap buying. And they're all components that go into construction, go into motherboards, go into, copper has got use for nearly, a lot of the electronic world is covered with it. So all of that, silver again. So I think the overall picture is going to be, again, strong demand, and you've had probably one of the major impacts is, and I think that is going to wear into the market soon, which is underinvestment in mining across those base metals. So again, you're probably going to see price spikes.
And also when it comes to precious metals like gold, how are you seeing things pan out there?
Well, it's 2030, 2050. It seems to be range bound. It jumps to 2070. There's just a short channel or a tight channel that it trades in. We haven't seen that blowout yet to 21.35 that we saw a couple of months back, which was the highest ever intraday. So I think that it's got the potential to probably hit that again. We're waiting to see what goes on as far as US Fed policy with rates, and that plays into it. Though you've got to look at Bitcoin, and I mean, 50,000 now, so you can't shy away from that. What we saw this time last year, 15 and 16,000, so it's explosive to the upside. So there's a level of, I think, interest to the gold market that is very, very strong. And, Indian, it's just mind-blowing what you guys are buying.
Yeah. Well, that's certainly been the case for a very, very long time, Peter.
Yes. Literally millennium.
Yes, absolutely. Well, but, I wanted to take the conversation around the currency forward as well. And you did mention the federal policy, the Federal Reserve, and what they intend to do. Of course, a lot later on in the year, we also have US elections.
Of course.
I'm sure that it doesn't have as much of an impact at the moment. I'm sure there'll be a lot of other factors which will play out. How are you viewing the dollar index right now?
Dollar index still around that 104 mark, and we thought there'd be, if you're putting your mind back to November, certainly it was March was blast off as far as rate reduction, and so the dollar and that fear of missing out rally and all of that, the meat and potatoes that ground that market up, and really it exploded to the upside. The Dow and S&P through 5,000, Dow at record, NASDAQ nearly at 16,000. All of that rally over the last 3 months has been enormous. And everyone thought, well, yeah, you'll see a rate cut. Well, that hasn't materialised in March, and they're saying it could be May, and even that's starting to lose a little bit of its lustre. So it probably be pushed out to summer. And then, as you mentioned, you've got an election 8 months, 3 weeks away, and who's counting? And it's going to be dramatic, I think, for the political circus and how that plays into Fed policy and naturally inflation and energy prices. Right,
absolutely. Well, Peter, it's absolutely exciting to have you in here in our studio. Thank you so much for joining us and taking us through your views on the markets.
Thank you very much.
Well, that's Peter McGuire for you, and telling us and taking us through what the expectations are with respect to several of your commodities, as well as, of course, the currency. We've spoken about a handful of factors, of course, which could, in fact, influence prices moving in.